What's going on, everybody? Stas here. Welcome back to another video. So the markets did not do well today, and we got to break them down in this video. We have to break down some charts, individual stocks. What are my thoughts on the markets? And of course, we got to break down what I'm doing. But before we do, make sure to get your free money for Moo. You get up to 5 free stocks, each of which could be valued up to $3,500. Just use that link down below or go to stassurfest.com/Moo. Deposit at least $100, and that's how you get your free money. And with that being said, let's dive into the video. So check it out, guys. The NASDAQ 100, actually, we have SPY pulled up here. So we'll start off with SPY. SPY ended up going down 1.3%. NASDAQ 100 down 2.2%. We had the Russell down 2.4%. And we had the Dow down about 0.8%. VIX up 13%. And mind you, the VIX closed over 20 points, which is not good. And we had gold down 0.1%, silver down 0.3%. So overall, a lot of volatility, and the selling pressure clearly continued. And what I'm noticing here on the 10-day chart, which is not good, is the potential start of a downtrend or a downwards reversal, if you will. You guys can see we put in a lower high at about 456, 457. The previous one was at 462. SPY's now also trading under both moving averages, and it's right by the lows from last week, which were right around 449, 450. So if we take the lows out from last week, we hit a lower low. That would mean that we are in a new downtrend, right? Or a fresh little downwards reversal, whatever you want to call it, right? We would have made 2 lower highs or 1 lower high and then a lower low. So that would start the downtrend. And I'm seeing that on Triple Q as well. Let me pop that up. And this is again on the 10-day chart. We have the first high from last week, the second high from today being around 369.50. And if this takes out the lows from, I think, Friday being around 359, if this breaks those lows, boom, we take the lows out, lower low. We just started a fresh little mini downtrend. And I'm not saying the markets are screwed overall. I'm not saying we're going to go all the way back down to the lows, although that is possible. And by lows, I mean the lows from the middle of March. I'm not necessarily saying Triple Q is going to go to 315 or SPY is going to go back down to, where was it, 410? Yeah, 410 roughly. I'm not saying that, but all I'm saying is we might be seeing a little bit more selling pressure in the short term here, maybe down to about the 180 SMA on SPY, which is right around 440 on the 4-hour chart. Maybe Triple Q goes down. Let's take a look here. Maybe towards the mid 340s, maybe low 350s. I wouldn't be surprised if that were to happen based off of what we're seeing. And again, if these two indexes or ETFs that track the indexes, if they take out the lows from last week, then we're probably going to start seeing that selling. So yeah, watch out for that on SPY and Triple Q. And like I've said, this is a good time to have some cash. I'm not saying the markets are going to collapse or anything, but when we are selling, that is when stocks obviously go down. And if you have cash, right, you could take advantage of these opportunities. Maybe you could day trade, do whatever, short-term stuff. So what do you guys think? Drop me a comment. Make sure to smash that like button and subscribe if you haven't done so already. And now let's talk about some stocks. I want to show you some charts that aren't necessarily bullish. In fact, they're looking a little bit toppy. In other words, the top might be in for these stocks. I'm not saying that for sure, but the charts, they're not looking that great. Let me show you. Number one is good old Apple. I love Apple. I'm not a hater by any means. It's one of my long-term positions, but the chart right now is looking a bit toppy. Look at this. We hit a high last week of $179.50 to 80 cents roughly, and we just hit another high roughly at 179. And what is that, guys? That is a fresh, clean double top. Look at that. If I pull this up, you all can see it. One top last week, we just topped again, and right now we're holding above the 180 SMA, or rather it's the 50 SMA. We're holding above it here on the 4-hour chart, barely. And if this thing gives, if we start falling low 170s and we take the lows out from last week, this might be going down mid 160s, no problem. So this looks a bit toppy. I'll be honest. Another one that looks toppy, Amazon, AMZN. We talked about this one recently, but now it's clearly failing as of now to break out of this overall downtrend that you guys can see on the yearly chart. And I have pointed this out before. You all can see it. We've made the all-time high. That's the first high, 37.70. The next one was at 37.50, and now we're putting in the third one potentially at 33.70. And what we're noticing, if I zoom in on the 4-hour chart, what we notice here is we're getting a clear-cut head and shoulders, which is not what we want to see. I mean, you guys can see the left shoulder here, the head, the right shoulder, and this could end up dumping even more, maybe 3,000, 3,100. That's where that right shoulder could complete. So Amazon's looking a little bit toppy. Nike's looking toppy. I think this one's already tanked a lot. Or actually, no, that's the next one we're going to talk about. Hold on, guys. Wait a second. We're going to save the worst for last. Nike's not looking that great, guys. It is back under both moving averages after we momentarily broke out of them last week or 2 weeks ago. Now we're back under both moving averages, and today it went down 1.5%. And we also have a bit of a double top on Nike. We have one top at 138.80. The next one's at about 139, 140. So that's not looking good. So at this point, I would not be surprised if Nike started making a move into the 120s again. And mind you, we're at 132 right now. So I think there could be some downwards pressure. Applied Materials is not looking good either, guys. AMAT's the ticker. This one went down 6% today, and that's after it went down even more a couple of days prior to that. Look at this. Just a couple days ago, last week, this stock was at $142, and then it got hit very aggressively. A lot of the semiconductors did. Intel did. AMD did as well. So a lot of those got hit, and today got hit even more. And going back to the 4-hour chart, this might be taking the lows out. We're very close. We're about $4 away from the 118 low, which we hit. When was that? In the beginning of March. So watch out for that. This looks the top was a couple of days ago. We're a little bit late on this one. But it might get worse, guys. So watch out for it. Applied Materials. Another one that's just looking awful, guys, is Starbucks, ticker symbol SBUX. Let me pop it up. And funny enough, I'm drinking out of a Starbucks cup right now. Look at that, guys. Starbucks friggin' cup. My fiance got this. I think, yeah, it's a Disney one. This might be a limited edition. Who knows? Look at that. Yeah, I don't know. She got this when she was at Disney. Anyway, shout out to Starbucks. This is a great cup, but the stock has not been great. Look at this stock, guys. Today it went down 4.5%. We were watching it last week. We called out this inverse head and shoulders, which clearly did not play out. Now we're back under the moving averages. We dove down again 4.5% today, like I said. And by the looks of it, this might be taking out the lows, or at least going down to test the lows from the middle of March, being around $78. So as a trade, guys, as a long, going bullish or being a short-term bull on Starbucks, it's not looking good for you. I'm not looking at it like that. But you got to realize, as the stock continues to go down, it opens up more and more value for the long-term investor. Think about it. Each dollar that Starbucks comes down, you're essentially getting cheaper and cheaper shares. And if you have a long time horizon, 5 years, 10 years, 3 years, you want the stock to go down and down and down, because if you want to get rich off the stock, or if you want to make a lot of money, which is what most of us want to do in the markets, right? We want to build wealth over time, make a lot of money. You want stocks to go down, because if they go down, the valuations compress and you get them at cheaper prices. You get richer faster. That's granted if the stock does bounce back, which historically S&P 500 has always gone up, right? So if you just buy heavy at low prices, guys, it makes you compound the money quicker, wealth quicker, right? Which is what we all want at the end of the day. That's the goal of investing long term, obviously, right? So yeah, Starbucks coming down is not bad if you're a long-term investor. But again, as a trade, short term, unless you're shorting it, if you're shorting it, by all means, I think it looks pretty good right here. It might be going down more, like I said, but going long, not quite yet, guys. I'm not feeling it quite yet. So those are a couple of stocks, a couple of charts that are looking a bit toppy. Again, Apple, Amazon, Nike, Applied Materials, Starbucks. And the truth is, there's a lot more. I mean, we could talk all day about this, about toppy looking charts right now, because quite honestly, the markets, that they're just all over the place. They're all over the place. You know, we have the Trump SPAC, DWAC, which you guys probably know why this one's going down. It's lost momentum, and now that Elon Musk bought Twitter, it's not looking good for this, because now Twitter might get revamped, and there might not need to be any reason for this new social media platform. So DWAC is getting destroyed. Another one, two, I guess, the meme stocks. AMC's down. AMC today went down about 9%. Not that great of a day. It's clearly selling off under the 50 moving average. Now we're going down to about the 180 here on the 4-hour chart, which is at about $18-20. That might be a nice dip buy. If you think there's going to be a round two pop in these meme stocks, AMC might be a good buy around 18-20. I'm not a financial advisor, guys. I'm just saying, and in my opinion. And GameStop, let's pull that up. GME, this one, it's under the 50 SMA now. It's down 10%. It went down 10% on the day. This coming down to, let's say, 125, 130. That could be a very good price for GameStop. So those are some stocks. Honestly, this chart doesn't look that toppy. The GameStop chart or AMC, those look all right. But they have been selling off a lot, so keep that in mind. And they're coming down to pretty interesting spots. So let's now talk about some stocks that don't look toppy necessarily, that look pretty decent. Number one here, which you guys might know, you might not. If you like peanut butter and jelly, you probably know. It's Smuckers, guys. Ticker symbol SJM. This stock went up 2.3% on the day, and take a look. It's trading above both moving averages. We're noticing it's breaking out of the wedge now officially, which we've been making higher lows since September, and the stock's also been making lower highs since the middle end of January. So we're in the wedge, or I guess we were, and now we're breaking out of the wedge and the moving averages, and it looks like we're fighting with the highs from Friday. I think the highs from Friday are actually, it might have broken out of the highs from Friday. Yeah, the highs from Friday were around 137.50. Today we got to about 137.90. So I think this momentum in Smucker, whatever it's called, here it says Smucker Company. I'm going to say Smuckers, guys. Whatever, right? SJM's the ticker. Now that we're seeing this breakout, I think we could be going 140, 145 again, which, mind you, that was the high from the middle of January. So that's number one that I'm looking at, which the setup is pretty nice. McDonald's is another one, MCD. This one's slowly but surely breaking out of both moving averages. Today the stock went up 0.7%. Today it did well as tech obviously got slaughtered. The NASDAQ went down over 2%. What we're noticing here on the 4-hour chart is McDonald's has been holding strong above this 180 SMA at 240, 245. Now it's trying to break above 250. So I'm going to put my alert at 250, maybe 252. That was the high from last week by the looks of it, so I'll do that. Mark is at or above 252. Check this out, guys. I mean, just last week we hit about 252. So if we crack out of there, we break above there, there's going to be a big push, especially if we see more selling in the NASDAQ like today, and we have these Dow stocks, the value stocks, if you will, do well or hold up. I think McDonald's is going to do well. So watch for 252 to break. From there, 260, that's where it could be going in my opinion. We also have Travelers Company. TRV is the ticker. Let's pop it up. This one went up. Actually, it went down 0.25% today, but overall, it doesn't matter if it went down because this stock has been holding up like crazy and it's ran up a ton. And as the markets have sold off recently, this one's only down 4%, which is really nothing. And it's still holding above the 50 SMA, and it might break. It might break amidst the selling that we might see. And if it does break, we might get an even better deal. Remember, when stocks go down, that is not the worst thing. And especially if it holds trend. If it breaks 180, sure, it might do that. And it goes to 170, that's right by the 180 SMA. We've held that many times over the past couple of months. I'm going to be watching buyers stepping in anywhere from 170 to 175, or maybe even here where we are, 180. That's if the 50 SMA holds. So watch out for TRV. I like it. Momentum is definitely bullish overall these past couple of months, which is fantastic. Another one which I haven't seen the stock in a while, or I haven't really watched it or looked at it, but it popped up on my screener today. It is Glaxo. Smith climb. Ticker symbol GSK, guys. Take a look. This went up about 2% on the day. We're noticing a clear golden cross on the 4-hour chart. The uptrend is also continuing, and we're obviously above both moving averages. So this is just simply one that, again, we have the uptrend continuing. It's moving out of these moving averages. This just looks like it wants to maybe go up and test the highs. That's simple. Maybe even take the highs out if the uptrend does continue. And those highs were back in the beginning of this year, 2022, right around $47. So for Glaxo, if I could even freaking say it right, guys, just watch out for a 47 move, maybe even higher. As you guys can see, the all-time high was hit about a couple years ago at $48. Maybe it was even higher than that before. Yeah, it was $76 back in 1999. So we'll see if this starts gaining momentum. We'll see where it can go. Maybe it touches 50. Who the heck knows? So keep your eyes on GSK, TRV, McDonald's, MCD, Smuckers, SJM, and also do not forget to keep your eyes on SQQQ and TQQQ. Just to quickly remind you guys, these are leveraged ETFs, and mind you, they're very risky. I would not touch them if I'm a very beginner. I would not trade these. But if you're a bit more intermediate, advanced, you've day traded before, these could be very good for you in this volatility. We talked about the VIX. It went up 13% today. We had the Russell down, S&P down, NASDAQ down. So when we're getting these wild swings, these are the ETFs I like looking at. I mean, look, SQQQ today went up 6.5%. If you were able to catch that and make 5% on $10,000, guys, that's $500. On 1,000, that's $50. That is a pretty, I'm not even going to say a pretty good day. That's a freaking amazing day if you make 5% in a day. I mean, we're not penny stock traders here. Well, maybe some of us are, where we make 80% in a day, but that's a bit unrealistic. But 5% on a very good day, I don't think that's that unrealistic. So keep your eyes on SQQQ for sure. If we get more selling, this will probably start pushing mid-high 30s in my opinion. And watch TQQQ. If we somehow get a reversal, we start ripping tomorrow, which is possible, we might get a bounce back on this. This is the bull leveraged ETF, and who knows, we might be going back up 60 on this, higher than 60. It's possible. So yeah, guys, that's pretty much it. If you all enjoyed the video, hit the like button, subscribe, drop me a comment. Feel free to join my Patreon if you want all my buys, sells, call outs, morning update videos, plus more. That's linked down below, or you guys can go to StockSurfS.com/Patreon, and don't forget to get your 5 free stocks, up to 5 free stocks, each of which could be valued up to $3,500. Just use that link down below, deposit at least $100 with Moomoo, and you get your money. And with that being said, I'll catch you guys in the next video. Thanks for watching. As always, peace out.